Okay, give me 10 minutes and I genuinely believe I can improve your trading forever. Not because I'm going to give you some magic indicator and not because I'm going to give you some secret strategy, but it's because most traders are focusing on the complete wrong thing. Now the reality is most traders don't fail trading because of lack of intelligence, they don't fail because they're lazy, and they definitely don't fail because the industry is rigged. It's because they simply never build a framework. And most traders wake up every single day with no structure, no understanding of risk, psychology, or execution. And they'll just enter random trades hoping that the next one will change everything. And eventually the emotions catch up, they start overtrading, experiencing FOMO, blowing accounts, and starting all over again. So in this video, I'm going to break down the 4 concepts that genuinely changed my approach to trading forever. And if you genuinely apply these, your trading over the next couple of months could look completely different. So without further ado, let's get straight into it. Okay, so diving straight in here, and this one is super important and I wanted to put it at the start, but it's a tough pill to swallow for a lot of you guys, and this is the fact that your problem isn't strategy. And it's something that I see in a lot of new traders and a few that I've spoke to myself, and that's the fact that they believe that the strategy is the holy grail of the trading space, when in reality you need to understand that it's actually only 1%. Now, there is 2 very different looking strategies on the left and right here. And as you can see, one is definitely frowned upon. It's full of indicators. It's super ugly. There's signals here telling you when to long and short. There's a MACD indicator here. There's some GAN thing here. It's a very, very ugly looking chart. But the thing that you need to take away from this is if you collected enough data using all of these 3 confluences, it could be a profitable system. Now the trade on the right here is more of a market structure approach, and this is the approach that I use. I've used this every single day for the past 3 years, and it is a very, very simple strategy to follow, but that is not what makes it better. This strategy and this strategy are the complete same on the surface. There is some differences underlying that make it completely different, and a lot of you guys are stuck with this. Messy charts and no checklist. You have no rule book to follow, you're trading from candlestick to candlestick, and you have an emotional approach. And this is what is holding back your strategy. So the actual confluences themselves aren't the issue here. It's more your approach to that strategy. Now, on the strategy on the right here, you can see it's a simplified and clear approach. So that helps entirely. That's why, I started off using indicators and stuff like this, but I did not use it for very, very long. There is a predefined criteria, a very strict rule book to qualify and disqualify trades, and then there is no emotional decisions being made here. So because you have a predefined criteria, it means that it's lacking emotion, which is good, and that is exactly what we want, because the strategy makes the money, whereas having framework provides longevity and consistency. Now, when you have consistency, you have repeatability, and repeatability creates discipline, and from discipline, that is what creates a great long-term system that you can use time and time again. So if there's one thing I can take from this lesson, it's to understand that it's not the strategy that needs changing, it's more how you approach the strategy that you're using and how much data you have on the specific moves. Now, lesson 2 here is kind of subject to lesson 1 as well, but it's the fact that you're looking into the wrong things. And what I mean by this is you're so focused on executions rather than observation as well. So observation is super important and it plays most of the roles within trading. Execution is only about 10%, whereas the 90% of the time you need to be observing where you're positioned in the market and making sure that the environment suits what you're trying to do. Now, as you can see here, a lot of you new traders are focused entirely on execution mechanics. So as you can see, there's fair value gaps here, everywhere on this chart. It is full of both bullish and bearish fair value gaps. And that's because you consider this an entry confluence, which there is nothing wrong with that at all. But the problem that you're facing is you don't understand your positioning within the market. So you're not observing where we're positioned and the environment that we're trading in. So you don't know whether we're in an AMD cycle, you don't know whether we're in a search and destroy cycle, a continuation cycle. You don't know what you're getting yourself into, and you could have the best entry model in the world, but if you're not positioning it correctly, that is what's going to defeat you long term. Now, as you can see by this specific chart here, this is on the 15-minute time frame, and what you can notice is there are certain areas of the market that have higher volume than others, and it is by a significant amount as well. And the problem is the market is split up into 3 areas. And if you don't understand this right now, please listen in, because this is crucial. It seems very basic, but people don't seem to understand it on a day-to-day basis. And that is the fact that we have 3 areas when we're trading. We have our premiums, we have discount, and then we have equilibrium. And what's happening is 99% of you guys are getting yourself stuck within this equilibrium stage. Now, what is the problem with this? At this equilibrium stage here, we're at the 50% of a complete range. So from the high here to the low here, that is considered one specific range. But what you're doing is, when you're trading within the equilibrium, you're not aware whether price is going to go up or whether price is going to go down. Now, what experienced traders like to do is wait for us to be in these discounted or premium areas, because we understand that institutions are looking to take out early buyers and early sellers and take higher quality positions. So right now, as I said, you're stuck taking entries at this 50% area. And that is why these lower time frame fair value gaps that I just showed you aren't going to help you in the long run, because you're not observing where we're currently positioned. And an entry right here is so much more low quality than a sell position from right here. So as you can see here, a perfect entry in the wrong area is still a bad trade. And if you can take anything away from this specific lesson, you need to understand that 90% of the time, the market is working within this equilibrium area. And so many of you guys are getting caught up in not having the correct directional bias, and the market only provides these opportunities around 10% of the time. So although you get entries less of the time within these areas, the quality of positions is so much higher. And for longevity, you need to understand that these areas require patience, because if not, you're going to get caught up in all of these accumulating areas here. Okay, so lesson 3, your psychology is being destroyed by overtrading, and not just overtrading, but other things as well. So the usual trader cycle looks something like this. You'll watch content, you'll then force trades using this setup because you don't understand the positioning, like I said in lesson 2. You'll win small and feel lucky, so you'll get confident. From there, you increase risk, lose big, then you have self-doubt, and you restart the cycle again by watching more and more concepts. I'm going to cover this very, very shortly. But what this is doing is damaging your psychology and damaging your progress at the same time. So to develop an understanding of something, you really have to do it hundreds and hundreds of times. That's why when taking trades, we have to backtest data so we get a deeper understanding of how the model actually works, and then we forward test so we can see how we execute it in live market conditions. Okay, so we have a chart here, and it's basically understanding next to progress, and it should be exponential. So you should be learning and progressing, but also developing and understanding. It should be directly correlated into you becoming a scalable trader. Now, what happens is, if you're on this cycle right now where you're watching content, forcing trades, winning small, getting overconfident, increasing risk, and losing big, then self-doubt, and again, repeating that cycle, it all stems down to the overconfidence into the increased risk. And what this is doing is damaging your psychology, because you think you're progressing and developing an understanding, but when it doesn't work and you restart the cycle again by watching content, your understanding drops again. And that is simply because you're not developing an understanding of one model. So in turn, you learn a model, you overtrade it, you lose, doubt, learn again, so your understanding goes up again. And again, the cycle continues, and you either end up unprofitable or inconsistent. So you need to focus on one specific model, trade it time and time again, and build trust with that specific model. And from there, that's when you'll develop consistency, profitability, and scalability as well. Okay, so lesson 4, super important. You don't need more time, you need more reps. And what I mean by this is you're stuck watching content over and over and over again. You know, you're watching Alex G, how I turned $100 into $1 million, how to start forex trading for beginners, the trading industry hate me for this free 10-hour course. All of this bullshit isn't helping you. It's damaging your progress, because you're mixing up refinements with overcomplications. The more knowledge that you have, the harder trading becomes. You need to be on a straight path with the straight concepts, doing it time and time again. Remember, we're looking for repeatable systems here and not simply trying to intake as much information as possible. Screen time doesn't build skill. You need to find a system, backtest it, avoid noise such as these videos here, and then simply scale and refine that model. Observation outweighs execution, and collecting data, building confidence, and executing when the environment is correct is what's really going to help you scale as a trader. So you need to understand that this is one of the most important things. You're addicted to education, but you're allergic to execution. You haven't given your model enough time to prove whether it works for you or whether it doesn't. So adding in these extra confluences that you've seen from other videos isn't going to help you, and it's going to damage you more long term. Okay, lesson 5, from a confused trader to a structured trader. Now, I know that a lot of you guys are confused. You don't want to admit it due to ego, but you are confused and you have zero structure. You think you do, and you think that your strategy is the structure, but there is so many frameworks on the outside that are so much more important. Now, I hope you guys have found some value within this video. There is 4 very, very important lessons there that you definitely need to take away and integrate, and I promise you that if you do, your trading will completely change over the next couple of months. I've just made a full entity trading model PDF and put it into our free Discord, where you can access it and see all of these lessons and the confluences and frameworks that we use on a day-to-day basis. If you did enjoy this video, please make sure to leave a like, and if you aren't already, make sure to subscribe. If you guys have any questions at all, make sure to leave them in the comments and I'll reply to every single one of them. I hope you've enjoyed this video, and I will see you in the next one.